The following segment is sponsored by Xterra Incorporated, trading on the TSX Venture Exchange under the symbol XAG.V. Xterra plans to become a mid-tier producer of silver and base metals through the development of its Bilbao deposit located in the central Mexican mineral belt in the state of Zacatecas, as well as through additional exploration and acquisition opportunities. Find Xterra on the web at xterra.ca. Join me for a conversation with a frequent guest of the show, David Morgan, the Silver Guru, an expert on money, metals, and mining, also a lecturer and an author. Mr. Morgan has written Get the Skinny on Silver Investing, available on Amazon.com. His website is themorganreport.com. David, welcome back to the program.
Also, it's always good to be with you.
You sent me an article that came through GATA, Bill Murphy's organization, just a while ago about silver manipulation really affecting the silver mining companies. And really, these companies can do nothing about the situation.
Yeah, just to go through it a little bit, point by point. GATA has been doing these daily dispatches now for quite some time. I think the secretary of GATA, Chris Powell, who I know quite well, does them. And he's very good. I mean, he points out a lot of different things throughout the day. There's 3 or 4 of these a day. I usually at least glance at the titles of them. And it's usually pertinent to the gold and silver markets and what's going on, manipulation, mining company executives, all kinds of things, economics, etc. But this one really caught my attention because it's titled Silver Mining Company Says It's Helpless Against Market Manipulation. Now, that's his title. But what's interesting is that this goes on, and he quotes what a major mining company, silver mining company, and that's, he didn't say major, but it's obviously a producer. And so I'm going to put it in the category of mid-tier to maybe upper-tier silver producer. And they said, thanks for your email. We share the frustration, but we don't attempt to take action against the bullion bankers for manipulation because, one, it's primarily the responsibility of the U.S. Commodities Futures Trading Commission, not the companies, to regulate markets. So the companies would have to sue the bullion banks. You know, I really have to agree with that statement. There's all these regulations in place, and yet they don't seem to be enforced. I mean, basically, the regulation that most people really scream about, and in my view, rightfully so, about the manipulation, has been on the books forever, as far as I know, or for a very long time. And that is, you cannot have a amount of contracts in any of the futures markets that will give you control. In other words, obviously, if you have too many contracts, and be it wheat or corn or silver, you can move the market with your buying pressure or selling pressure with the amount of contracts you hold. Well, that's already on the books, but it's not enforced. So that's point number 1. Point number 2, manipulation is just too difficult to prove. And, you know, that's been one of the points I've made over and over again. Not that it doesn't exist, but to be able to prove it is difficult. But I think it can be done, but it doesn't necessarily mean it's been attempted, obviously, and certainly it's been very, very difficult. What I'd like to do, Ellis, if I might, is take a moment here and read a letter that I received from the lead counsel on the silver manipulation. I've never done this before. It would be an exclusive for you. This is prior to the release, I don't know what, it's been a couple months already. They didn't say there was no manipulation. It came out, the CFTC said, we've done our 5 years of looking again, and we don't find anything that we could use to prosecute, is basically what they said. So this is from the lead counsel on silver manipulation. So he's speaking, not me. I had the opportunity yesterday to connect with lead counsel silver class action complaint, partner of the New York law firm, Lovell, Stewart, Halburn, J. Jacobson, LLP. It was a fascinating interview. During the interview, Chris provided an update on the silver class action complaint, as well as announcing a key missing ingredient, one which may be needed for survival of the case. Starting out, Chris explained, the status of the action is that the court ruled the silver complaint and all its claims will be dismissed unless plaintiffs are able to improve their allegations. In response to the court dismissal, the plaintiffs have filed a proposed amended complaint, and the defendants, J.P. Morgan, have opposed the motion, and the plaintiffs have replied, and the motion is pending before court to make a determination. The normal procedure in such a case is that a complaint is filed at the start of the action, then the defendants respond either by answering or making a motion to dismiss. There's been a motion to dismiss, and that might indicate the case isn't going strong, as those cases in which the answer is filed. In other words, it's to dismiss it, we're not going to answer the complaint. In discussing merits presented in the amended complaint, Chris stated the commodities futures markets involve confidentiality of orders, and that not specifically alleged emails or specific orders or targeted trades in the complaint. We have alleged through large positions the percentage of the market, and the large positions constituted the plaintiff's expert estimates of the suppressing effect of silver prices positions had. Unfortunately, we did not set forth the exact size of the positions nor the exact size of the trades. We did, however, give the percentages of the total open interest percent concentrations in terms of estimates and ranges. We also allege large trades on 2 or 3 specific days during the class period, but large, quote unquote, is about as specific as we have been, and we haven't alleged any numbers. So you can see where this is going, and this is what makes it difficult. Speaking on the missing ingredient needed to take the strength of this case to a higher level, he added, we tried to supply the extra material to make enough points to overcome our lack of having any insider emails or things like that you would have to have from a government investigation, or even hiring someone who's sometimes called a canary, quote unquote, who gives specifics from inside the company or exact amounts of the positions of the trades. I've been doing these commodity manipulation cases since 1976. Many times have had quite a bit more detail in the complaints than we have now. So if anyone has credible information about the conduct of J.P. Morgan or others in the silver market during the class period, we'd appreciate receiving it. The class period ends in March of 2008 and runs till the end of October 2010. It is worth noting that Chris and his law firm have already invested many hundreds and quite possibly thousands of hours of labor and resources in this case so far. He said we pay economists and investigators, had cases where we put in more than $1 million in costs and checks that we wrote into the case, and the case was not successful. In addition to that, we have the attorney's salaries and overhead. Bottom line, the silver manipulation case is on the edge of being thrown out for good after investing many hundreds of thousands of dollars into this case so far. Chris is humbly asking for help from the market. That was prior to the case going forward. J.P. Morgan said, there's nothing going on, and they dismissed it. And then it came back with stronger evidence, and of course the CFTC went on their merry way and looked and looked and looked and looked and looked, and then came back and said, well, we looked, and what we found was there's nothing that we could use to prosecute any wrongdoing. They didn't say it wasn't manipulated, they just said it couldn't. So this is belaboring point number 2. Manipulation is difficult to prove, but I think anyone, whatever side you're on, the best case to prove it's manipulated, without a shadow of a doubt, was done by GATA, by Adrian Douglas. God bless him, he's deceased. And Adrian showed again and again and again how the LBMA has an opening price and a closing price. And the delta between those two are so far beyond the ability of randomness that it's provable. It's an absolute proof by any mathematician. Even a 6th grader with basic arithmetic would understand that it's impossible for a random walk for this to take place. That you have an open at one place and a close at the other, and that same configuration remains again and again and again and again and again and again. And that is impossible in a random market, in a free market, in anything close to a free market. So Adrian's probably the one who should be credited for it, and others have come up and done the same thing. I think there's many others that have looked at it, and I think since him, but I'm giving credit where I believe it is due. But that, I think, is the best proof you could have. Now, whether that was presented in the court or not, I do not know. So that's point number 2. Point 3, such a lawsuit would take many years and cost many millions of dollars with no certainty of outcome. Well, I think we've already proven that. 4, every company invests its cash where we think it creates the best return for shareholders. I can't argue with both of those. I mean, in today's world, and especially with the mining companies being as beat up as they are, to take on this after what's already taken place. And remember, this is a dispatch that was done on December 3rd. This is all up-to-date information. So that was the 4 points that the company made. And Chris went on, and kind of the other side, I mean, I don't want to mischaracterize this. And what he pointed out in his missive was that GATA had taken on a complaint on a Freedom of Information case. It cost them $50,000 to do that, and they won the case. And if I recall, I think they made like $2,500 on that. And so in other words, the court ruled in their favor. So on an economic basis, and this is my interpretation, Ellis, so let's make sure that this is me right or wrong. I think I'm correct. But they won the case, but they didn't, make up the legal fees. Or maybe they did get the legal fees and $2,500. I really don't know, but I think he would have put that in here had he done that. What he did say that it was $50,000. Many mining companies could squeeze that much out of their tails pilings in a few days if they're so inclined. So he's kind of implying that it might not cost millions of dollars, and that would be true. But to get to the manipulation case, believe me, it would cost a great deal, and it's already been beaten horse beat to death, and they're not going to do anything about it. Finally, he goes on to say, as in many industries, though apparently not the monetary metals mining industry, sponsor trade associations advance their interests generally, realizing their strength in numbers. Silver mining company IR reps' reply was not very imaginative. I think it was straight up, really. That's my opinion versus Chris Powell's, and we're friends. It really was no more than a shrug signaling that the company can't be bothered to take its head out of the ground while its price of its product is rigged downwards. Such a company and such an industry are not a good candidate for survival. Basically, I'd say, I'd go with Chris on the last sentence. Obviously the industry's been pounded, and a lot of these companies are right at the margin, meaning they're very close to the cost of production, or price of silver is under the cost of production. So that's true of any industry. As far as banding together, yeah, that's certainly strength in numbers. But I really kind of side with the companies on this one. The only thing I wanted to add, and the reason I asked for some help on this, Ellis, was that a couple of the companies have done what I think is the best. First Majestic, Endeavor Silver, and Silver Standard in the past. There may be others. I'm leaving you out. Forgive me. And what they have done is use some market timing or some basic common sense. And if you're mining your product, which you can view as money or not, but it is your product, it's how you make your living. In a primary silver mine, obviously that's silver. And you hold it off the market when the price, your total cost, is $22 an ounce and the price is at $19. Why not just put that away and wait for better prices? Now, I fully understand in a very small company or startup or company that's very low margin or has huge debt, and this doesn't work in every case. I understand that. But in some cases, like the First Majestics, the Endeavors, and the Silver Standards, it can be done. They've done it in the past. So I think Chris is making his point. I'm making mine. My point is that some of these companies are doing what they can. I agree with this IR person that for them to go in and waste a lot of time and money to do it would be probably a waste of shareholder value. There could be, and I say could, if there was some type of consortium where maybe, 5 of the largest companies got together and said, let's do a class action, try it again. Would it be worth it or not? I'm inclined to say it probably wouldn't. And I'm also inclined to say that the biggest producers, of course, are bimetallic miners, and they could care less. They're in bed with the bullion banks. Your largest silver producers, for the most part, I know the managements quite well, and I've got nothing against them, but they just are not inclined at all to go on anything that discusses manipulation. I don't even like to discuss the word manipulation. So that would leave kind of the mid-tier. So, I don't want to be defensive, but I did want to share my opinion. I think the best thing that can be done is what's already been done, and that's making a statement. We've got a valuable product. We think it's not fairly priced now. We're going to withhold it from the market until prices improve. That's my take. One more thing, and I think it could be another show, Alice, and that's this taxation law that's going to take place in Mexico. I think the final vote is taking today, the 4th or 5th of December, if I recall correctly. And once it's enacted or passed that law, I think it would be vital to your listeners, all listeners, to hear a summary. We're working on that as we speak, but we can't really make the summary until we know the exact law, because these laws can get changed at the last minute. A few sentences here taken out and, percentage point change or whatever, so we're going to wait for that, but I think that's something that needs to be addressed as well.
David, thank you for that. I have a follow-up. I remember talking to Brad Cook, chairman of Endeavor Silver, a few years ago. What he likes to do during these types of markets, and certainly this is one of the most severe markets we've seen in many years, he's an opportunist. He looks for properties that companies can't hold on to. He's probably, I haven't spoken with him in a while, he's probably looking to make some acquisitions right now. What's to keep some of these high-end junior miners or mid-tiers from doing exactly that? It reminds me of the 70s and 80s when many of these mom-and-pop grocery stores folded in lieu of the Walmarts and larger chains, and these service stations or gas stations closed down and the large oil companies consolidated, the supermarkets consolidated. Are we just going through a big consolidation as well with these mining companies?
Excellent point. I wish I'd made it. Again, it goes back to this letter that we use our shareholders' money in the way we think it's the most advantageous to the stakeholders, the shareholders. And you make an excellent point. Would you rather go on and try another run at this thing and run your head into a brick wall again as a metaphor? Or would you like to take that same cash balance and buy silver in the ground at pennies on the dollar? And I think you're right, Ellis. This is the way to do it. I mean, the management's responsible to who owns the company. And in good companies, management owns a fair amount of the company, as well as institutions, individual investors, and whoever comprises the shareholder base. And that's who they are supposed to be responsible to. So to my thinking, it's more responsible to do what you said. I mean, use that cash, and if you can find a good deal, because unfortunately, business is not easy at times. And maybe it's never easy. I don't know. But the point is that you can take that cash, buy companies that maybe spent their cash too fast or had a drill program and they can't raise more money, or there's all kinds of scenarios out there. There are 9 companies that are selling for below their cash balances right now. Now, these are little bitty companies that are, exploration types for the most part. But, I mean, this is beyond common sense. It's the old, can I buy a dime for a nickel? And none of them are that lucrative. In other words, their cash balances, they're selling for less than their cash balances, but not at that kind of a discount. In other words, where the company's worth $10 million a market cap and it has $20 million in the bank. There aren't any that are that lucrative. But there are several, again, that have cash balances that are greater than the market cap, which common sense is, why not spend 88 cents to buy a dollar? That type of thing. And that's just the cash. Then you've got the properties and everything else that goes along with it, which in some cases is equipment not. Again, these are small companies. But I just want to make the point. I mean, this has got to be close to a bottom as far as I'm concerned, because when you can see those kind of deals out there, and nobody seems to care, that's usually a sign of a bottom.
And we're starting to see that now, aren't we?
Yes.
We'll be right back. The Ellis Martin Report is sponsored by Xterra Incorporated, trading on the TSX Venture Exchange under the symbol XAG.V. Xterra is a Toronto-based resource company, and their primary project is the Bilbao silver-zinc-lead-copper deposit situated in the Panfillo-Natera district of Zacatecas, Mexico, approximately 50 kilometers south of the state capital of Zacatecas, where Xterra is currently completing a bankable feasibility study. Between the company's Bilbao, Laguna, and Panfillo projects, Xterra has a resource of 100 million silver equivalent ounces, including 33 million ounces silver in 43101 compliant resource. Zacatecas is a well-known mining district with infrastructure in place. Mining opportunities are both open pit and underground. There are no significant environmental issues, and there is an available local workforce there, as well as goods and services for development of the projects. You can find a full investor prospectus on Xterra's website. Just log on to xterra.ca or find their logo and click through on the homepage of our website, ellismartinreport.com. And we're back. David, it's always a pleasure to speak with you. I look forward to a follow-up interview in the very near future. Thanks for joining me today on the program.
Thank you.
I've been speaking with David Morgan of themorganreport.com. Listen to the segment again on the podcast page of our website, ellismartinreport.com. The preceding segment has been sponsored by Xterra Incorporated, trading on the TSX Venture Exchange under the symbol XAG.V. Xterra plans to become a mid-tier producer of silver and base metals through the development of its Bilbao deposit located in the central Mexican mineral belt in the state of Zacatecas, as well as through additional exploration and acquisition opportunities. Find Xterra on the web at xterra.ca.